But that also, I guess, the company is being quite conservative. Let's move on. For the markets, as Nigel has been pointing out, there has been a sell-off. So it's 150 points gone in the Sensex, while the Nifty is down more than about 50 odd points. The mid-cap index is selling off quite rapidly. Yes Bank is at the low point of the day. That's lost about 5 odd %. Weakness seen in IndusInd Bank, Z Entertainment, BPCL, Tata Steel, Sun Pharma. Big cut seen across the board. Even heavyweights like L&T and ICICI Bank are at the low point of the day. Let's move on and talk about the IT sector. The IT sector has actually been doing well for the last few days on the back of the INR depreciation. The INR is virtually at 8-month closing lows. V. Surya Narayan, the Executive Vice President and CFO of Mphasis, now joins us on the sidelines of the Motilal Oswal conference. Good afternoon, Mr. Narayanan. And before I get to the margin picture and the rupee depreciation, I want to start with the top line and the market outlook. Your Q1 revenue growth was actually slightly lower than market expectations on account of a lower growth in your direct channel. What was the reason and what is the outlook looking like?
I don't think quarter one was lower, and always between quarters you will always have puts and take. But I feel there is we are quite confident of the growth for the year, and we have in fact guided towards above market growth on the direct side, and with a strong pipeline we are quite confident of the growth.
Well, you have guided for HP DXC to grow at market rates and Direct Core to grow above the industry growth rates. What is your own expectation of market growth rate for this year?
Yes, I think that from an industry perspective, when we talk about industry growth, I think we are going back to the guidance normally of 8 to 10%. And Direct Core, we have said that it will be above market, that is beyond about 10%.
Okay, Direct Core will be above 10%. You have upped the lower end of your margin guidance, so it now stands at 15.5 to 17%. What was this predicated on, and are you going to get any benefit of the recent INR depreciation?
Yes, to some extent, there were various factors which led us to give a higher guidance, increase the lower band. One of them, of course, was the rupee dollar. However, as you may be aware, a large part of FY20 we are already hedged, and so that's not going to give us a substantial jump. But I think keeping all other factors in play, we increased the guidance.
Okay, so would you say that the margin guidance was upped due to lease accounting changes?
It's a combination of lease accounting and your hedge and other factors.
Okay, lease accounting and hedge has resulted in the company upping the lower end of its margin guidance. You know, sir, the management commentary has turned a bit cautious during the Q1 numbers, especially in the BFSI. Considering that BFSI contributes quite a bit to your overall revenues, are you feeling the slowdown?
We are not seeing any slowdown, especially in the client set we have. And on the BFSI side, I think also it's important to highlight, we had mentioned this in the earnings call also. We also have a large portion of the BFSI into financial services, where we still see a good potential. And overall, even on the banking side, as you may be aware, the overall IT industry is expected to grow, say, around 2% year on year. But we are expecting 16% growth in the digital spends of enterprises, including banks. So it all depends on which part of the business you are servicing. If you are servicing on the digital side, there is a lot of potential to grow.
Okay, and in BFSI particularly, are you servicing a greater portion on account of the digital size, and therefore should we expect that even BFSI will see a double-digit growth in FY20?
Yes, certainly, because if we are overall Direct Core, we are going to grow above market. Naturally, BFSI being a substantial portion of it will also grow, but we also have other verticals, especially logistics, transportation and healthcare, where we also see a good growth.
Are you witnessing any slowdown in deal wins?
No, we are not seeing any slowdown as of today.
Thank you, Mr. Surya Narayan, for joining in. So that's Mphasis saying that as of now, there is absolutely no slowdown. They're positioned on the right side of the digital spend. So although the overall IT spend is going up by 2%, digital spend is going up by 16%. And the company is quite confident that for direct core business, they will see a above market growth or a double-digit growth in FY20. HP DXC should see an 8 to 10% revenue growth. No real benefit coming in account of the INR depreciation, considering that a large part of their FY20 revenues have already been hedged. Get into a break. Then on the other side, Prakash Gaba and Hemen Kapadia will join in with their trading strategies.